Hey everyone, Danny Reardon here, head educator and co-founder of EFX. And in this video today, we're going to be talking about one of the most important topics when it comes to trading. And this is something that most traders aren't doing or just aren't aware of. And we're talking about backtesting. And I know what you're thinking when you hear that word, but I'm not talking about backtesting charts in replay mode. I'm talking about backtesting you and what you're doing. So if you can't accurately identify your strengths and your weaknesses, what you're doing well, areas that might need improvement, you're simply going to stay stuck and you're not going to see the results that you're looking for. So in this video, I'm going to talk about all the important do's and don'ts as I backtest one of our members' trade journals. A trader's edge comes from data collection and backtesting, and you're about to learn what to do and what not to do when backtesting. So let me know if you get value from this video, or if you have any questions. Enjoy.
I'm sharing my screen. Just give me 2 seconds here. I see something like this. This is the most important part of trading. Like this is not like live trading isn't going to make you a successful trader. Watching me mark up charts and sharing those with you, that's not going to make you a successful trader either. You might pick up a couple of things here and there, but you know, it's the trade journal work. It's the backtesting work. That's what's really going to move the needle for you. And if you don't have to take my word for it. Talk to any successful trader in this community. Trade journaling is changing my trading massively. Yeah, I mean, there you go. I mean, like literally, like this is what's going to do it for people. And it's just, you know, and it's, you know, props to you for showing up to this call, because this is the stuff that like is required of you to be a successful trader, a consistent trader, doing that grunt work, doing the stuff that, you know, is not pretty. Everybody would much rather look at a chart and go over a topic and talk about structure, a top-down analysis, then look at spreadsheets. But you have to fall in love with the spreadsheets just as much as you do with the charts, right? Like I talked about the other day, and there's people in the FXU who are in this group, just to give you some perspective. We have 8 weeks of modules, especially week 7, week 8. I think week 8 or week 7 has like 8 or 9 modules, and week 7 has week 8, I think it's like 7 or so. You know, some of the weeks have, you know, 9, whatever. It's all different, right? Only 2 weeks are talking about chart stuff and strategy stuff. That's just should give you some perspective of like the big picture here and what's involved. Like if you're not backtesting and recording data properly in all areas, like it's just not, you know, I'm going to record in the, you know, my trades and throw some snapshots in there. If you leave out the market buy feedback, stop wasting your time. It's not going to work. Like you have to do it all. This is a huge piece of that puzzle, is being able to record your data effectively and be able to backtest it to really extract what you're doing well, what you're not doing well, what patterns you're best performing, you know, which are the least, time frames, pairs, like you name it, right? Like there's a lot of key information. I'm just going to pull something up here that's going to help me go through this, and then we're going to run through this journal. So this is a guy who has been with us for a little bit, big potential, you know, and I like seeing this. I like seeing this. He has 13 trades, 2 winners in that result. You see stuff like this consistently where, you know, 13 trades, 2 wins, but slightly profitable. You know, if you eliminated, let's just say 3 of those trades at 2% each, you know, that goes from 0.43 to a 6.43 positive for the month. Like it can make a huge impact, especially on a $100,000 account, right? So I've seen people be able to do it just by what they identify in the market buy feedback, whether it's, you know, certain fears or emotions, right? Like there's backtesting that's involved with that. I've seen people do it with just simple things, not even regarding the charts. That's why backtesting is so important. You know, not effectively backtesting your data, you know, that can keep you stumped. So, you know, doing this process the right way, recording the data to the, you know, the right way as well, you know, you can put your finger on something that can have a dramatic impact on your results and literally send you flying. But people not doing this process correctly, they spin their wheels. And first, you know, go-to is, you know, I need more market knowledge. I need more strategy knowledge. There's something that I'm missing. Anybody relate to that? If you relate to that, drop a 3 in the chat. So I see a bunch of 3s. So if you relate, just know that those aren't the answers. Like digging more into the strategy and the trainings, or, a different educator to try to find and I understand completely that some people just mesh with other people, and that's perfectly fine, right? Not everybody is going to take to me or my personality or my way of teaching. And I recognize that, right? But, jumping from educator to educator, or course to course, or strategy to strategy, that is not the answer. That is not the answer. That's chasing something that you think is the answer, and it's not. Backtesting all of those three things, the data, the charts, and the market biofeedback, and using a SWOT analysis, like when I first started trading, like I didn't even know what any of that stuff was. And I talk about it pretty frequently. And like when I linked up with some of my now, good friends, and they were mentors when I first started, and they showed me this stuff, and I was just like, man, why is nobody talking about this? Like, why haven't I been shown this stuff? Like, what's up with that? And then, I never was doing it. And guess what my first reaction was? Like, I don't want to do it. Like, nobody wants to, trade journals, and it's just, recording everything and, back testing it all. It's a pain in the ass, and it's tedious, and it's time consuming. But I also recognize, and what you need to recognize, is that short term. This is something that's temporary. This isn't part of everyday trading. This is just helping you transition through the stages of a trader's evolution, because you're not going to come in and learn something and dig into the education and the trainings and then jump on a demo, test out what you're doing, and then expect to see good results and then take it to a live account. That's people with the anticipation that they can do that in stage 1, jump over stage 2, and just land in stage 3. You cannot jump to the top of the mountain. You need to climb the mountain, and that is going to take some time. It's going to take some skill. It's going to take some patience and discipline. It's the only way to the top of the mountain. So let me just speed over here, and I'm just going to pull up this document. This right here are just the important stats that you want to pay attention to just when backtesting the data. This is just data that you need to extract, because this is where, important strength and weakness can be found that can make a huge impact on your end result. And when I refer to data, I'm referring to everything I just showed you, like the stats, this stuff here, and all the things that are populated down here, all of this stuff, right? You're looking to see, right? Like, this should give you clarity. If you don't know how to backtest, this is what you're looking for, this, right? Some of this stuff might not apply, but you're looking at, correlating losing trades, right? Do you have the directional bias correct or incorrect with those winning or losing trades, right? What does that tell you? If you have a losing trade, but your directional bias was correct, what does that mean? And same thing with a losing trade, but an incorrect directional bias. What does that mean, right? That's what you want to dig into. So if you have a losing trade, but the directional bias was correct, could have been you missed something, right? It could have been, what you saw was manipulation, but wasn't manipulation. There could have been imbalance underneath your entry point of interest. There might have been liquidity. You might have misread something, whatever it might be. But getting the directional bias down, that is a key aspect. That's one of the biggest key components to having consistency in trading. And then you can go back and look at what you missed. Then you can learn from that, use that chart, work on your pattern recognition, and then apply it to the next one. Same thing with a losing trade with an incorrect directional bias. What is the reasoning for that? Did I misread structure? Did I misread the manipulation? Was there manipulation? Where was the higher time frame targets? Did I have higher time frame alignment? Whatever that might be, that's what you're looking for. Best and worst performing pairs. Maybe you're absolutely getting smoked on gold. I recommend you don't trade metals, indices, cryptos, exotics in stage 1. You just shouldn't, right? But let's say you got a bunch of GBP pairs and you're a bunch of US majors. You're performing very well. You're reading AU, for example, very well, and you're getting smoked on GBP pairs consistently. Eliminate those. Focus on the ones you're doing well. Same thing with patterns. you see flag patterns with manipulation very well, but signature patterns and bypass patterns or whatever, you just can't see them and you just don't trade them effectively. Whatever is giving you the best results. Remember, things were doing well, things were not doing well. We're looking at buys and sells, the information that I already talked about. We're talking about best and worst performing execution. What is historically the best execution for most people early stages is limits, because that's going to eliminate a lot of second guessing, hesitation, fears, and emotions that cause bad, negative, impulsive decisions, right? Because you look at everything, you map out your trade, you have your confirmations, you set a limit, and then you go about your day. Maybe smack some alerts on there. When you're looking at market execution, you're watching price come to the entry, and maybe it's coming too fast, and that makes you second guess and dismiss every single confirmation you have up to that point. Right? So for most people, market execution is going to be their least worst performing method of execution. And typically those pending sell limit, buy limits are going to be the best, but that's going to be different for everybody. That's what you need to find out. And then we're talking about best, worst performing timeframes, market session, time of day, time of week, time of month, best, worst performing chart patterns, best, worst performing market environment, right? Trending market, reversals, continuations, corrections, right? Then we're looking at stuff like this. These can be a little bit more, these stats and what you're recording them for is a little bit more complicated, right? Why is average target, average stop loss, average risk to reward important? Win percentage for break even, that's a big one, right? So for example, if you're averaging, 1 to 5 risk to reward, that's your average risk to reward. You know the total number of trades that you're taking on a monthly basis. You're also going to know your break even rate and your, the percentage you're going to need for, to be a profitable trader. Same thing with like the targets and the stop loss size, right? So if you see like your stop loss is 20 pips or less, or maybe like 10, 15 pips or less, you're getting absolutely annihilated on. But you see anything with like a 20 plus pip stop loss, a bigger stop loss, because keep in mind, stage one, we're not trying to focus on, increasing reward or getting those sniper entries or chopping up FU candles and looking at the 50%. You're working on directional bias first. So if you see yourself getting smoked on these lower stop losses, right? And you see better results on, 20 plus size stop losses, right? That's key information that you want to extract and then apply to your trade plan, which would say, if this has a stop loss that's under 20 pips, then I do not execute this trade. You got to know these numbers because that can dramatically impact the bottom line. These things that we're talking about here, yeah, it's going to be a pain in the butt, but like our trade journal tells you all this stuff. It's not like, we're doing this manually anymore. Our trade journal is specific to our strategy. This is going to tell you everything. A lot of it's done for you and tells you all these stats that we're talking about down here. And we can see the wins and the losses. And we can also see his directional bias if they were. So you can see for his directional bias for the buys, which he's favoring, he has eight correct and 2 incorrect. So that's, you can see right here, 80 correct and 75 or 80 and 75. So you can see he's favoring the buy. So that could be some key information here. So everything's here, right? Like all those stats, everything's here, right? Like time frames. Look at the time frames you're doing well with and which ones you're not doing well with. Here's the pairs. It's going to show you the same thing. Which ones you're doing well with, which ones you're not. And then what you do is you perform a SWOT analysis. You make a summary. So you can see here, all in all, he's talking about the different things that he's identified. That happens here. And then goals for next month, those are the things that you're making the changes to in your trade plan to apply to that next sample size, right? Trim pairs. Deep down, I think I might have too many. So let's see what happens to results if I drop a few. Focus on trades with higher time frame expansions, with clear manipulation, right? All these different things. That's what you're doing. And then you make changes. And then you're going to see your results make a shift. So he doesn't have a ton of data in terms of like actual charts here, but I do want to look at the snapshots so you know how to document these, because here's an important thing. When we talk about snapshots, and keep in mind, when you're back testing, right? You're doing that when? At the end of a sample size, whether that's 20, 25 trades or at the end of the month. So early stages, you're going to typically trade more pairs. It's going to be a broader range of criteria. So keep in mind, like early stages, let's say you have 20 trades and then you circle back at the end of the month to trade one. What do you want to see in your snapshots? Because keep in mind, you want to make your job easy. The last thing that you want to do is take snapshots and one, have no idea what the surrounding environment looks like or at higher time frame. So he's actually added higher time frame before and afters as well. You know, some people like to do before, middle, and after so they can see the price action between point A and B so they can get familiar with the, you know, the in-between part of it. So after the month rolls around, let's say like here, he's taken 13 trades and he circles back to trade one. You know, you want to be able to pull up a snapshot and know exactly what you're looking at, why you took it, what type of pattern it was, the confirmations, and the surrounding environment. So I'm just going to pull up his and see what they look like, and we'll go from there. Okay, so he has a straight up markup here. He has a little bit of text here. Let me look at his higher time frame before. And you can't forget the higher time frame. That's a key aspect of it, because the last thing that you want to do is take a snapshot, not know something, and then have to pull up TradingView, pull up that pair, and then find where that pattern is and run through the charts again and try to put yourself in that position of when you took the trade and think about what you were looking at, what you were marking up, the confirmations, and what you were thinking. So you want to be as detailed as possible when you're actually in the moment of taking that trade and, you know, documenting everything and what you're feeling and what you're thinking and the emotions and fears that are present, right? So you can see here, he's got a couple things written here. So that's what I would write. What you want to include on your charts are anything of significance. All you're doing is taking a text box, throwing it onto the chart. And I would write out, you have questions that are available to you in the cheat sheets, questions that you should ask yourself by marking charts up. You can include those on the charts and answer those in a text. You can also throw a text on these charts, maybe like the before of the actual time frame you're taking it. And here, he's got a wide open spot here. Throw a text on here and write out all his confirmations, right? That's going to help him when he's backtesting. Include the confirmations right here. And then down here, you can write like a little summary, write notes, write anything that might be, you know, anything that you really like about this trade, anything of significance that you want to remind yourself when price comes back. That would be an important thing to take note of, because if he lost this trade, let's just take a look at what happened to the end result, which he did lose his trade. So let's just see what happened. So we can see what happened here. You can see here, price came down and took out those. I'm actually not even sure we had his stop loss here. You can see price came down through his through his stop loss, stopping him out. He goes, "Why'd you do this?" But this is do you see this here? A chart like this, he got the pattern right. He had targets. He got the directional bias correct. It not only came down to his entry and filled him, but it ran to his entry. So most people, what they'll do is they'll see this price come through the stop and take a snapshot. You don't want to take a snapshot of that, because then what do you know or don't know? You don't know that if the directional bias is correct, right? You don't know if this thing was just coming down, like taking out those equal lows I pointed out before running to the target. So looking at this data that we have just on this chart, we can see that his directional bias was correct. Price came up and ran for the previous week high and hit his TP, but there was something that he missed. There was something that he could look at and say, you know, where did I go wrong here? Is there anything I missed, right? Looking at this chart, here is the manipulation. He marked that up here. And then we saw an impulsive move, making this high up here. And then we can see price retrace, nice flag pattern, all the way down to this candle here. And he saw some price action forming in this area here. And he looked at this candle right here with this wick before that move. So taking something like this, it's higher risk. This is kind of what we refer to as a double mitigation or a double tap entry, where it's a pattern created inside a logical area. But if you get stopped out on this trade, it doesn't invalidate the setup. The only way this setup would be invalidated is if price exceeded this candle here. So he could have done one or two things, right? Price hasn't turned here, hasn't broken structure. He could have used that for an entry and just dropped his stop loss down to cover this low here. Or he could have just kept the entry on this and used the stop loss all based on this candle here. Had he done this, right, this trade here, what was the risk to reward on this trade? Keep in mind, 13 trades, 2 winners, and just under 0.5%. That trade that we just looked at, the risk to reward on that trade was over 1 to 8. So he did, 1% on that trade would have been 8%, over 8%, 8.2% roughly. If he did 2% on that trade, that would have been a 16% trade. It looks like, oh, he did 0.5%. So that would have been 4% in change with already what he has in the bag there, what he ended up the month with, right? That one trade there could have been the difference of a break-even month or, almost 5% month, right? That is something I would definitely focus on next time, especially if this is a common pattern. If he is looking for double tap patterns, especially if that's just something he's misreading or not performing well, but he sees it's respecting that main manipulation candle and hitting it and then running to his target like that consistently, that is a big strength and weakness that is shown in this chart that you can easily make an adjustment to. Even something like this, that could be all he needs to become a profitable trader. And that we're just looking at the charts right now. We haven't even looked at his data. We haven't even looked at his market biofeedback. Another big thing I do notice with the market biofeedback is the majority of trades that people identify negative thoughts or emotions or fears or feelings, but still take the trade anyway. So there's one person that just always comes to mind when I think of this. There was many, many months of data that we backed. This was somebody I was working with privately. And we removed every trade that she felt some type of way about. Like she identified in the before enough in her mind to not execute the trade, whether it's lack of confidence or, feeling anxious about the trade because she didn't have a lot of confirmations. If we removed all the trades that she identified with some type of negative emotion or fear or whatever it was prior to the trade, she would have had consistent profitable months. It made that much of an impact on her bottom line. So before the trade here, he was feeling calm and neutral about this trade, would have liked a break of structure. You guys just see what I meant? You guys just see what happened there? Exactly what I just talked about just happened in the first one we read. Look at his chart in the double mitigation, double tap pattern that we saw, which I said didn't break structure, hasn't started to run yet. He identified that. Would have liked a break of structure from the reaction to the 30 minutes. So that's caused a little bit of doubt in the back of my mind. Confident in the overall bias. He was confident with the pattern and the directional bias, but he was not confident with the entry. And we that's the one thing that we picked out before we even read the market biofeedback. That's a huge adjustment. That's a huge win right there. His directional bias is on point and he's feeling confident with it. That's the most important thing. Now he has to make an adjustment on how he's executing those trades. I would eliminate those double taps, brother, and I'd focus on those candles. I would get in on those double mitigation patterns only if you get that break of structure and see that reaction that you want to see. Otherwise, stick with that manipulation candle. If he did that, this end result for this month, just with that one trade, snapshot and market biofeedback, boom. During the trade, I was at work, did sneak in a quick check when I had 5 and saw blue, so I was optimistic and could be the one to regain the lost pound. lost money. So this is after, okay? Not sure why I didn't take the 1 hour manipulation candle. That's the one that we were talking about. Bit annoyed as that was a beauty, considering how many of my trades get stopped out like this. Ding, 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 ding. He's finding a weakness here. We've identified it prior to even reading the market file feedback. He's already identified it in his mind. Keep in mind, this guy's got some experience with me. He's reading his directional bias. He's identifying his patterns, an alignment with structure, but he's got those double taps, those double mitigations. Those aren't working out clearly. And he identified it before he even took this trade. That's not a coincidence, folks. Let's see, bit annoyed as that was a beauty, considering how many of my trades get stopped out like this, then hit TP. I'm not even sad when it happens anymore. Would have been an account saver, though not ideal. Bias target was on point, so pleased with that. So keep in mind, here he's mainly talking about trade notes. So market about feedback is, we're talking about emotions here, fears, the decisions that they've forced us to make. This is good stuff here for the trader's notes, but you guys see the correlation here between what he's identified, and this right here is very valuable information. He's seeing this happen consistently, where his TPs are getting hit after he's getting stopped out. He has, I already know for a fact that he has more than enough information to make enough changes, right, with the strengths and weaknesses that he's already identified to become a profitable trader, just based on that trade right there and the market biofeedback. See, do you guys see how backtesting can be very effective? If I just taken the 1 hour FU that led to the previous week high, it would have been a win. This trade marks the first one since my routine change. I am to wake up and do my meditation, have my coffee before opening laptop, not just with my eyes and laptop and starting to mark up. I am not 100% woken up and ready to take the trade, et cetera, et cetera. Happy I implemented this, and it very nearly worked out. I feel I'm close to getting my consistency, but I want to look at another one here. Let's take a look at this one. Okay, so he has a pattern here. He is looking for the previous week high. He has a candle here, lots of manipulation, or excuse me, lots of imbalance below here. It's just one thing I kind of noticed here. He's looking for a retracement back into this. So let's take a look at the end result of that. So price reacted and looked good, breaking structure to the upside, but wasn't to be, or wasn't to break even, one of the two. This was the end of the daily expansion. Price started its retracement from here straight through my stop loss down to the FU area and mitigated the daily POI. This is where it reacted for another daily expansion. So I want to look at the higher time frame. He identified that candle too. He knew after that push here, he had his directional bias right. He was looking for it to come up. It looks like he had this area here, the 50 of the daily. So, he kind of looked at an entry up here, kind of like in pullback territory, 50 TP levels. So let's take a look at his market biofeedback. He should be really happy with his market biofeedback and his directional bias, because adjustments can be made on that. Directional bias, getting that down is just a huge thing. So calm and confident. Although losing streaks are not fun, they do not affect me like they used to. That's huge, right? Casino owner mentality, thinking in probability. That's what these trade journals show you, especially when you see 13 trades, 2 winners, and a positive result. Especially when you see one trade like that first one that we went over, which could be, that could be a game changer for him. Just that one thing alone, right? So that would have given him a 5% month. That was a $100,000 account on FTMO, and he made a 5% gain, right? 80% of that, that's a $4,000 month on a $100,000 account. 8,000 on it too. Still using logic to make my trading decisions, not emotions. Everything checks out here, so I execute. At work, I didn't even see entry trigger. I have developed strong ability to leave trades alone, which is awesome, man. That's going to be a huge benefit to you in the long run. Feel confident about this one. Pattern was solid, target was there, et cetera, et cetera. Just a losing trade, not necessarily a bad one. So, if it's following your trade plan, you have your confirmations and everything's in check, man, that's a good trade. Okay. You have that second point of interest, that could have been round two. Or if you see something like that, that can be a situation where you split risk or lower risk. That can also have a big impact. I want to look at this one really quick. We'll end it on that one. I'm very curious to see what this one is. Okay, here's higher time frame before. Here, it looks like this is where he was. Okay, so this was good. Okay, this is the second POI. He has a nice signature pattern. Now, who can see a difference between this double tap, double mitigation pattern in a logical area versus the first one he looked at that we reviewed on EuroCAD, where he got the TP, but he got stopped out? Yeah, Giuseppe, he has a break of structure here. So here you can see price was, kind of accumulating here, right? Equal highs, equal lows. Price pushed down, hit that second POI, right? And then a strong push up, breaking structure. So that is a big difference in what he should be looking for if he's going to focus on these type of setups. So short-term highs here, previous week high also in alignment with the daily trend. I don't know if this is the kill zone because he doesn't have his fibs on this, which I would include here. Again, it's really important to have as much information on these charts as possible. Let's take a look at his after snapshot. Okay, so solid pattern, many confluences, and played out exactly how I anticipated. Just didn't quite come low enough. Unlucky, but lots of positives here. So that's awesome. Great information, another directional bias, and another target hit. But you can see, what is a couple of his weaknesses might be, right? We're looking at entries here. So the first one we looked at, he had the pattern similar to this, but no break of structure. He should have focused his entry on the actual manipulation candle. But his entry, you can see his kill zone right here. His kill zone and entry, everything was good there. That's just a really unlucky situation. So tough break there. He's getting some really good positive results here. His directional bias is really good. The other one definitely called for, some adjustments for the entry. This one was there. This one was solid. Just tough spot with the imbalance there. If that imbalance was lower, he would have been good. But that's why imbalance is really important, though, because that was the only spot of imbalance. My eyes were just drawn to that imbalance. When I see one area of imbalance like that, I really like that. It's almost like jumping on a trampoline. Like price comes into it and jumps on it and then just goes flying. Too bad he didn't have a little bit more imbalance near his entry. Or if that one area of imbalance was on his entry, this would have been a really good trade. He is well on his way. Like we're talking about like minor adjustments here, like that can make a huge impact. Like those two trades right there, definitely the first one. That could have been a huge, a 180 on this end result. With that one adjustment there. And we only looked at a handful of his trades. He's got 13 here. So I guarantee you, if we were to travel on this route, we would find a lot more valuable information, probably all based around execution and entry. Like that's the one area that I'm noticing right now with him is his entries and like execution and the method of it. It's a good journal here. I think there's a lot of valuable information here. And I would not be surprised if there was more information similar to what we've already looked at that could be a huge game changer from him. So we're going to end it there. Hope you guys enjoyed. This was a really good journal, man. I'm glad I pulled yours up today. You have some slight things, man, we just need to work on. And I liked what I saw. Your directional bias, man, it's on point. It's on point. When you have that down, that's the best part. you just have to make some adjustments. You make some adjustments, man. Like it literally can be like a handful of trades, 1 or 2 trades in a sample size like this, but with a break even stage 2 trader that can just make all the difference and really not just send you to stage 3, but right into stage 4 and just scaling and finding that consistency. So really, really good stuff here, man. So we're going to call it there. Again, good session, man. Good journal. Good work with everything you're doing there. I'm really happy with what I see there, and we'll continue this Thursday. So take care, everyone. Hope you all have a great day, and I will see you in the next one.